Welcome to Stop Whining About Real Estate. Join us as we chat, sip, banter, and wine with the best in the biz. Grab a glass of your favorite vino, sit back, relax, and let's wine together. Hello, and welcome to Stop Whining About Real Estate. I am your host, Sarah Biernbaum. With me today is my co-host, Emmanuel Germain, and our amazing guest today, Cliff Bernstein with Fairway. Welcome, Cliff.
Great to be here. Thank you, Sarah.
So excited to have you.
Thank you. Excited to be here.
Yes, thank you. Welcome. You are the first loan officer that we've had other than, someone other than myself, I guess, on the podcast. So it's going to be really cool.
That's an honor.
Hopefully Sarah will be able to keep up with us. We'll try not to do too much.
I live in this world. I got it.
Too much lingo, but yes.
Yeah.
But welcome.
Thank you.
Cliff, let's get started real quick. A little bit of background. How did you end up in this hot mess we call the mortgage world?
You know what? I'm still trying to figure that one out. Years ago, I started my career on Wall Street.
Okay.
So different animal. It was a different business back then. Back then, when you managed like $100 million, it was a lot of money. Now, all these financial guys are dealing with private equity, hedge funds, and they're managing billions. So 100
Cliff,
million.
what year was this about? Just so I can get some perspective.
You ever watch Little House on the Prairie?
Yeah.
That's Lassie, right? Isn't that Lassie? Yeah.
No. Charles
Yeah,
Ingalls.
yeah.
Yeah, he was my partner.
Okay.
1995.
Okay,
so
got
a little color on that one.
Got it, perfect.
So I don't know. I'm really dating myself. Remember, they had a show on Sunday nights, Married with Children. Do you
Yes.
remember? Do you remember that?
Yeah.
Totally.
Love and
Al
Married.
Bundy.
Yeah, absolutely.
You know what? Sunday night would come around. I'd hear "Love him." I started getting pits in my stomach. I mean, the pain because of deceit on Wall Street. My $100 million. You're building positions in biotech stocks. All of a sudden, your $100 million is $5 million. Not a good feeling.
Yeah.
So a friend of mine was an attorney in Clifton, New Jersey. I was living in Manhattan at the time. Fairly successful living in Manhattan. A friend of mine opened up a mortgage company in Clifton, New Jersey. He was an attorney. He opened a mortgage company. He's like, well, why don't you come check it out? So after my day job, I'd take the hike to Clifton, New Jersey from Manhattan, the reverse commute. And I'd go a few times a week, maybe every day, a couple of months. He's like, you know what? You're really good. You have a knack for this. Instead of taking money now I'm
giving it.
Well, I wasn't licensed, but I was actually, listening.
We'll
I
edit
was
that part out.
I was.
It was 1989.
Back then the rules were very
Right.
different.
Well, they were correspondent lenders.
Yeah.
So, one didn't have to, but it wasn't to that extent. I was just more as a support to the loan officers, and they were actually listening to me. I was giving advice, not to clients, but to the loan officers. So I decided, you know what? Let me move down to Florida. I found an old associate in New York. I was in Florida. And I just, made the career change and started my own company. Back then, it was called American Home Lenders.
Okay.
Yeah. The rest is history.
Very cool.
Nice.
I've actually, believe it or not, I've actually been to Clifton.
Wow.
My shout out to my boy Chris Till. He went to Villanova and he worked in Midtown, and so he was doing that commute. And so, I think he lived in Hoboken and Clifton and that whole area.
It was 23-hour days.
Yeah.
Working the day job, then working the night job.
But you were like a baby back then.
I was a baby back then.
1998, so it was easy to do it.
So I give the credit all to Al Bundy.
I love it.
He got me involved.
He got you motivated.
He got me motivated.
I love it.
Yes.
So when I think Al Bundy, I think of the old stories regarding, remember that game where I threw 3
He
touchdowns?
lived in his high school glory days.
Yeah, the old football star.
There's current day people that walk around in our everyday life that are Al Bundys.
Absolutely.
Yeah.
Yes, there are.
Yeah.
Yes.
I hope
Cliff,
you're not talking about me, Sarah, but
Nope, never.
it was an amazing career, though.
Cliff, where did you grow up?
Queens, New York.
Okay.
Couldn't tell with the accent?
Well, I
can't shake it. Whenever I do a podcast now.
I wanted to pinpoint it.
Yeah.
Yeah. And now you're in Boca, Parkland.
I'm in Parkland.
Okay.
Yeah.
Okay. So tell us, so the journey, we're now a loan officer, branch manager. You've been an owner. You've been in the mortgage space for several years. Tell us a little bit about some of the things that you love the most about the industry, and what are some things you would want to change about the industry if you could?
Okay. When I was a business owner, back in 2001 when I started my company. We were doing well. We were building up the company. I had a partner. He was more on the accounting side, the operational side, so it worked well. But then, fast forward 2008, my 2 offices became 1 office. My 20 loan officers are now myself and my partner. And it was at a point where you had to make that choice. And I'm really saying to myself, what do I love most? They were making it very difficult to be an owner back then. We didn't know what the future was going to bring, what was going to happen. So we really had to pick a lane, choose a lane. Do I want to build a business or help my clients? It was impossible to do both effectively at the same time. So I chose my clients. And that's what I love about this business. I love being there for my clients. I love making the dreams come true because that's what we do in this business.
Right. And
we're the guy, I'm the man. We make that happen. We close that loan. That's like hitting a home run in the 9th inning and winning a game. When you get that CTC.
Yeah.
The roar of the crowd. Yeah. The silent roar. Yeah. That's what we hear, that CTC. We relive that, hopefully, 5, 10, 15 times a month. But that's what we live for, and that's what keeps us going.
You should get that on audio on your desk so you can play it every time you get a CTC, and you're like, yes.
That's it.
That is a good one.
Yes.
So the CTC, we're living for any that don't know what that means. It's clear to close. Essentially means the loan part is finished and we're ready to go into the closing department. All right, so loan parts. So you love helping the clients. That's your favorite aspect of it. Let's go the reverse. Mm-hmm. What would you change about our industry if you could?
Some of the layers. Some where I feel, and I get it. I understand. Back in the early, in the late 90s, money was free, it was easy, it was fluid, and the consumer really needed a lot more protection. They needed more disclosure. But I feel sometimes the pendulum swung just in the opposite direction. I feel that they made it a little more confusing where we're over-disclosing. I feel there's just too much, and trust me, I believe in clarity. There has to be understanding, and I believe it's our responsibility to educate the consumer. But there's just so much red tape in terms of this documentation where it's become sometimes ridiculous, where an innocent mistake could sometimes kill a deal because you didn't disclose properly. And you have to possibly redisclose again. You're up against timelines. You're at risk of maybe missing a closing date because of a simple human error. That happens. And because of all the red tape and the paperwork that they've over-disclosed, I feel I would like a little more common sense on that. I'm not trying to say I want to prepare my customer. I want them to know the expectations, and I want them to be protected, but I think some of the regulation is really hurting instead of helping.
Well, I think, to add to that, I'll give you an example specifically for me where it's always been really important. This concept of, for underwriting, once I've seen something, I can't unsee it. And in my mind, I've just never understood that, because unless you're going to portfolio a loan and keep it forever, that's not how you're packaging a product and putting it out there, right? So at the end of the day, it's about what the guideline is. Mm-hmm. If Fannie or Freddie on a Fannie or Freddie type loan allows us to do a 1-year return, and somebody made a mistake and submitted 2 years, this concept that you can't unsee the first year, it doesn't make sense to me. Mm-hmm. That's not what the guideline is. There's nothing about your job that says you have to now communicate that, yes, we saw that. No, you know what we're doing when we send that loan to the aggregator, when we sell it to Fannie, Freddie, that first tax return is not going to be there. So I just don't, I've never understood that. And that I think it's just an example to your point about layers and not trying to simplify. You know, they're doing now with like account checks and different products to try and make the bank statements process easier. But income is next. They've got to figure out how to do this, how to make it simpler for sure.
Well, yes, and to your point, I understand what you're saying because of the 1-year tax return, and the spirit, I believe, of that guideline is because we're going to reward the self-employed individual.
By the way, that's a great word. So that word right there is the part that everybody leaves out.
He said a lot. Which one?
The spirit.
Ah.
It's the spirit, the intention of what a guideline is, as opposed to the black and white, the line in the sand.
Yes.
You know, like
Right.
I feel like for lots of things, but sorry. All right, so sorry to interrupt, but keep
Right.
going.
No,
but the spirit, yes.
I believe the spirit of that guideline, they're rewarding the self-employed individual based on credit and income for that year. You've earned the right
Longevity. You have to have 5 or more years in order to get that.
We feel this is going to be a good loan based on your most recent tax return. Now, errors happen where possibly the year prior might have been a bad year for whatever reason. Maybe there was some expansion and some expenses due to, improvement or whatever the case. And now the 2-year average is a lot lower. And like you said, it hurts the debt ratios where the client's now not even approved because now you have to use the 2 years. Where it's only a 1-year the guideline's 1 year. You've been in business 5 years. You use 1 year. They should allow you to use the 1 year and not see that second year.
Have you started using AI? Do you currently use AI at all in any portion of your business? Let's start there, and then the second question would be, where do you think AI will change our business, and do you think you and I, in 5 to 10 years, will still have a job?
No, because I think in this business, you're always going to need common sense. And I think that's one thing that the AI is leaving out, or maybe possibly thinking out of the box. AI is going to be great for what's black and white. They're going to be able to, I believe, not replace the underwriter, but assist the underwriter with a lot more quickness in interpreting some of these tax returns where it may take an underwriter an hour to go through returns. AI will now be able to do it within seconds. So that's going to free up the underwriter to look at more files. It's going to improve efficiency. And I think it's only going to assist. It's not going to replace.
See, where I kind of see it is I think what you're going to do is, let's say if your company had 20 underwriters or 50 Fairway's a large company. I don't know how many underwriters you have, but I think what you're going to see is you'll have a pod leader, type thing, and AI will do the majority of it. You'll still have a sign off, but I do think that if you had 100 underwriters, I think 80 of them are going to not be necessary.
But don't you, just from an outsider's point of view, and I'm sorry to interrupt, but don't you think from an underwriting loan process, like I know there's certain things that are black and white, but then there's also stories to certain things that can explain why things are happening. So if you had a bunch of AI doing all of it, they don't know to do that extra step to see the broader picture, so they're going to kick stuff back. Things are just going to get denied left and right. And then it's going to cause this like kind of backlog of having to then resubmit with, I guess you get used to it. But to me, there's a lot of times where there's more of an explanation that's required or an additional piece of documentation or something that can kind of negate whatever it is that was not favorable.
Well, I mean, in 25 years, we're all going to be robots anyway. so it's a moot point.
That worries me. I'm still going to be here.
Are you saying we're not?
I'm just saying I'm definitely still going to be here.
I definitely welcome AI.
Do you write any of your letters of explanation through AI?
I'll do my chat GBT, I'll
explain why our wonderful client has completely turned around and is doing marvelous now. And those lates back in 2022, I mean, it's a no-brainer, right?
My underwriter came back to me the other day. And says, Cliff, you haven't used a semicolon since I've known you. What's going on here?
You're like, I'm taking a grammar app on my spare time at home.
Yeah, it's that semicolon. No more run-on sentences. My periods are perfect.
Punctuations.
Punctuations.
God, I feel bad for teachers these days.
Then and then, never an A, always an E. It's perfect.
I love that.
Yes.
Do you use a lot of AI?
No, not really. But I did see something at the you were there with me. We saw something really cool at this conference. It's an AI pin, and more or less you hit a little button. It's basically like an AI assistant.
Yes.
And I think this is the next big thing that they're all working on that says, all right, you know what? Like I want to have a dinner reservation at 6:00. I need an Uber. I got to fly out tomorrow. Make sure that I'm on this seat. And you're going to be able to communicate.
Yeah.
Very similar to what I think the original concept of Siri was.
Yes,
but
yeah.
Siri just doesn't work well.
Right. But no, what I'll do with that, again, I use it to assist. I'll put it in the chat and I'll see what they come up with, and then I'll use my own. I'll make it my own, and I'll go from there. It's more like a reference. So. But I
gives
think
you the guideline to go off of, and then you do the human aspect.
Absolutely.
Yeah.
Absolutely. Just for the spelling.
There you go.
I'm more of a math guy.
Perfect. Well, you're in the right field.
Yes.
Cliff, tell us a little bit about, so I want to plug Fairway for you. So tell us a little bit about Fairway. They're a large retail lender. I don't know I have friends who are branch managers in Texas and Iowa for Fairways, and I've never heard anything really bad about it other than the feud that happened between your owner and who was it? There was some back and forth.
That was a Rocket Mortgage.
Rocket.
Oh, no, I'm sorry. UWM.
It was UWM.
Yeah, UWM. Excuse me.
But outside of that, I've heard literally nothing bad. So plug your company away. Tell us a little bit about why you're at Fairway. And
Fairway is actually the largest company no one's ever heard of because we don't do a lot of advertising, and it's basically all referral business.
Okay.
Why do I like Fairway? I'll tell you right now.
Tell me.
I've been in business a long time. We were talking back in the 1800s. I've never been at a company where the people are the culture, they're so nice. They cannot do enough for the loan officers. At Fairway, the LO, the loan officer, we're kings.
And queens.
And queens, absolutely. They take their victories, they take ownership of the victories, they're truly happy about it, and they'll do whatever they can to support us. And that's not always the case. At large companies, in my experience, and I'm sure you've experienced this, the operational side of the company, there's usually some friction with the sales side. Mm-hmm. Not at Fairway. We're one team, and they're lovely. I can't say enough. So in terms of, are we perfect? No, but we try to be. Mm. And we know, we learn from our mistakes, and we all care about one another. And that's what separates us. I mean, and in terms of interest rates, we're as competitive as anyone else. You're not going to play the interest rate game. There's always someone who's going to beat you by a quarter or an eighth. Right. But it's not always about rates. It's about getting the loan closed and, working as a team with the same goal in mind. And that's what we do. And that's what I love about the company.
I like what you said. You said we care about each other. So, a lot of people say my company cares about the client and the business and everyeverything else. But caring about each other internally, I think, makes that big difference, which is essentially
right. And we've been recognized. I mean, if you look at the awards, we've won for the last 2 years in a row, best company to work for, over 5,000 employees. So that goes a long way. Yeah. JP Powers, Associates, things like that. So, but again, we all respect one another. It gets very, you come in sometimes.
It's a stressful industry.
It's a stressful industry. Absolutely. And it's not always sunshine and rainbows, to quote Rocky Balboa.
Right. Cliff had a full set of hair before he got in this industry.
No, that's not true. I started losing my.
Just kidding.
I use that line, but that's a little bit of a stretch.
It was Al Bundy that made the hair start going.
I started losing it my junior year in college.
Really?
Yeah.
Where'd you go to college?
Oneonta, New York. We call it the Harvard of the Northeast now.
I was like, I haven't heard of that one.
It's a great SUNY school. Great SUNY.
Got it.
Go Red Dragons.
That's awesome.
Oh, wow, Red Dragons.
Red Dragons.
I like that a lot.
Yeah, we were actually Division I for soccer.
Okay.
Yeah, but I didn't make it to one soccer game.
Okay.
That's all right. Listen, I love that you talked about culture. I think culture is a really, really important thing for companies. And, when we started this company, our company, our part of our core values is the employee experience. It's easy to say the client experience. Yes, everyone always thinks about the client experience, and if you don't, you're not going to be in business very long. So,
right. Yes.
And then for us, because we're your business model is identical to mine. We're 100% referral business. So the referral partner experience is really important, making sure we communicate, and we do that naturally. But for us, one of the things we added was really making sure our employee experience was top notch. Salespeople like you and I can't be what we are without our ops side, the backbone of the operation, not caring as much as we do. It's very hard. And to your point about what you said, I love that you highlighted that earlier about sales and ops having friction. And for us, we got rid of that so long ago. And I credit Sarah for being our culture queen. We call her our culture queen. And we, through this series of EOS is what it's called. It's basically how I run our company. But the concept was we got rid of any individual that we would call cancerous, any individual that wasn't going to care about things the way that we do and care about our people. And if you're selfish and you're in it for yourself and you're not going to help, you're not willing to lend a hand to anyone, or you need to leave at 5:01 as opposed to staying for 2 extra minutes because Cliff needs a CD to go out, to make sure that we close on time and look great in front of your referral partners, things like that. So I credit Sarah for being our culture queen.
Thank you.
Yeah, she does. I mean, Sarah does a great job. She's at the events. She's really representing.
She was just working at home. No, just kidding.
She's really representing well. And, we're both loan officers at 2 different companies. And why get together? Because I feel, first of all, competitive competition is good. It's good for everyone.
Absolutely.
I mean, you are the good ones in the business. And I see how you do your business. You're doing great loans. You have a great culture here. I mean, this place is really set up to just be someone's home because we're at the office more than we are at our homes. And this place is wonderful. It's like Disney World for loan officers.
I feel like we offer a little too much in snacks. I need to look at my credit card bill and the snacks, but outside of that.
My daughter would love that kitchen. Companies, loan officers like you and I, it just lifts us all up because you're doing good loans and you're making me stay on my game. I have to be that much better because people like you, loan officers,
vice versa. Thank you for the compliment, but vice versa.
Of course. So thank you for that. And who's going to benefit from that? Not only do we benefit, but the consumer benefits.
Absolutely.
Right. But then
if you know somebody else is going to do a great job, you got to up your game.
We got to up our game.
Sharpen your tools, be extra great with service and everything else.
100%. So we all benefit when the competition is Choice Mortgage, companies like that, Fairway. And then again, there are some players out there that we won't talk about that don't put us in a great position.
I look at, I love to work. So that's naturally for me.
You do?
Part of me is like, I need to have, my office needs to be a home. It needs to be a place where, because to your point, I'm here more than I am probably my house. And so it's so important to be surrounded. And I think that the thing I love most about being an entrepreneur is being in a position that I get to dictate who I want to surround me in terms of our employees, in terms of our staff, in terms of loan officers. And if someone doesn't fit the mold, and if somebody isn't somebody that if I'm not going to want to see you every single Monday through Friday and work with you because you're, why bother? You're not the right fit.
Yeah.
We're not that desperate for your couple loans a month.
It's not worth it.
You're a jerk.
No, it's not worth it. Yeah.
It's a relationship.
Right.
Yeah. We've had, I think in the past, like every company, we've had ops people that just You could tell naturally it wasn't where they wanted to be. They made it very well known that this is not where they wanted to be all day. And, the people around them are sitting there and they're going, yeah, I understand it's a job and you're not supposed to be rainbows and butterflies every day. But if you come here every day and you act like you really don't want to be here, it makes the rest of us feel kind of bad about it all too. And so, what he said is we got rid of those people that were creating this space, this dark cloud around them. And it was ops and it was also sales. I think we've had some sales people that, could have been great and lucrative, if you want to look at it that way. But if they were talking to the ops staff in a way that didn't make sense and, we were feeling it from the ops that they didn't like the way that they were being treated, that's a huge problem.
That's a big problem.
Because then you're ops leave. And then we had to kind of...
It spreads.
Yeah, like a cancer. So
Absolutely.
We had to figure it out and kind of really get rid of that and make sure. And when we interview people or recruit people or talk to people on the phone, the one thing that I look for on my conversation with them is how is your attitude about this? How are you going to feel working with you every single day? And, how are you going to treat people when things get stressful? And just kind of really feel them out for that and make sure that they're a good fit for us.
Absolutely. I call it the Jordan effect. I mean, what made Jordan, why were his teams 6-time champions? Because not only was he the best player on the team, but he was the hardest worker. So monkey see, monkey do.
Emmanuel
that's to use the expression.
Jordan of mortgages.
No. So I was giving a presentation last week, and what I explained about leadership was that to be a great leader, you are not loved in the moment. If you are loved in the moment, then you are not pushing your people anywhere near as much as you need to. Therefore, you're not getting the most out of them, and they're not ever getting to their own potential. A great leader will be loved after when he's all said and done or she's all said and done. And that's how I feel about Michael Jordan. That's why, and I made the analogy about Michael Jordan that way. His teammates, he was a you-know-what in practice. He was incredibly difficult. Right. And so, but today, what do they say? He's the GOAT, he's this, he was that, blah, blah. But during, his playing time, he wasn't easy to be a teammate.
Absolutely. He expected more.
Demanded more.
He demanded more, expected more, and they followed him. Because if the hardest guy in the team's working, I better work.
Right.
You get a big, huge gift when I retire with a speech of love.
So to go to the Bronx Tale, is it better to be loved or feared?
There you go.
That's a movie quote.
It is. It's a good
I'm kind of a movie buff.
What's your favorite movie?
My favorite movie. I don't have a favorite. Well, I do have a favorite movie. I'll mention it in a moment. I usually have like a top 5.
Okay.
There's about 20 of them in my top 5, if that's possible.
Does it change based on who's asking the question?
Number one will never change.
This isn't the math he does when he's helping you alone, by the way.
Here's the big.
What's number one always?
It always will be number one until the day is Goodfellas.
Okay.
It's my number one.
Okay.
Yes.
It's a mob movie, sorry.
I understand. It's before my time, but I understand.
You've not seen Goodfellas?
Of course I've seen it.
Yes, of course you have.
What's yours, like Princess Bride?
No. I actually have... I actually have never seen Princess Bride.
It's phenomenal. Come on,
it yours?
It's a great movie. Huh?
Is it yours?
No.
Steel Magnolias?
What's your favorite movie? Steel Magnolias.
Last of the Mohicans is definitely one of mine. I love it.
Sound of Music.
Not Sound of Music. So Sound of Music. So she makes fun of me because I don't have children. You both have children. And I just say, why can't you just blow that little whistle and they'll line up and say good night, farewell.
That would be nice.
That's the person that doesn't have children, obviously.
It's a joke, obviously. But
getting back to children. So Ants, number 2 for me. No, it's not Ants. That's
Wait, so your number 1 is Last of the Mohicans?
So I mean, I like Cliff. Yeah. To me, there's probably 5 that I would say are my top. So like, I love Braveheart. Good Will Hunting is fantastic. Last Mohicans.
Good Will Hunting's in my top 5.
War movies. I mean, like I didn't serve in the military, but I have seen so many movies that I feel like I'm equipped to be a SEAL.
Absolutely not.
No, not even close. No. I don't know. I feel like you kind of want me in your corner if there's a bar fight.
Nope. No? That's totally different.
Well, it's the same thing. I'm not a boxer or fighter. It's only for movies.
Low to the ground.
I've watched a lot of Van Damme movies. I've seen Rocky.
Oh, you used to love the Van Damme. Steven Seagal, Van Damme.
Oh.
It's like everybody that watched Grey's Anatomy and thought they were a doctor. It doesn't work that way, guys. Does not.
I think Cliff and I are more prepared than the wannabe doctors.
And I'll tell you my worst movie ever, which is actually, it was so bad that it was good. You ever see a movie? It's so bad that it's actually good. Barfly. I recommend that movie. It's the worst movie you'll ever see. I was actually watching it. I'm like, I'm going to turn this off. I'm like, I can't.
It's that bad.
I said, I can't turn this off. This could possibly be the worst movie ever made. I have to continue.
Who's in it? It doesn't matter.
Yes, I know who's in it. From the Pope of Greenwich Village. What's his name?
Ooh, another stellar movie.
As soon as you cut this off,
these Oscar winners here.
He's you know what's.
Let me ask this question while you're thinking about it. Have you watched it more than once?
No, no. I only watched it once. I only did it just because I had to confirm that it's probably the worst movie ever made, ever. Ever. It was Mickey Rourke. Mickey Rourke. I'm sorry, yeah. Okay. Mickey Rourke. Worst movie ever. He should have gotten an Oscar. That's how bad.
An award for being so bad.
It was he did such a bad job that the acting was so great. How poorly he did, how bad he did. I mean, you can't.
It's a good thing we're only on our 7th episode and nobody knows who we are and Mickey Rourke's not going to come after us.
Listen, another one of his movies, Pope of Greenwich Village, that's in my top 5.
Is it?
So, yeah, props to Mickey.
Yeah, I've never heard of it.
Yeah, so love him. Never heard of Mickey Rourke?
No, I've never heard of Pope of Greenwich Village.
Pope of Greenwich Village?
Yeah, no.
Don't walk, run.
All right, switching gears. A little bit less movie stuff. Okay. Let's talk about some of the things outside of your career that you're into. I know that you're a big supporter of IDF. If you want to talk a little bit about that.
Well, I'm a proud Jewish loan officer. Yeah, I mean, I just feel Israel has a right to not to get political because I'm not too political, but we have a right to defend ourselves, and that's exactly what we're doing. I mean, I actually was watching CNBC today with Netanyahu, and he was on, and
is that why rates dropped? Because whatever he did,
but basically, to a fault, it's not being televised or it's not out there. He's doing whatever he can do to give warning so people will leave that region because he doesn't want any civilian casualties. And the numbers even suggest now that they were inflated about all the civilian casualties. They've come down a lot lately. It was just I recommend, well, by the time, your viewers see this podcast, it'll be over. But he had a nice interview today on CNBC. I thought it was pretty interesting.
I do think it is actually, very unique. You never have any, I don't know in history where it's been announced when an attack is going to happen. Well. And, I don't, again, not to get political because I don't want to make this show anything politics-wise. Yeah. And people have a right to defend themselves and all of that. But just the sheer fact that they're announcing when they're attacking is such a unique strategy. Absolutely.
I mean, they mentioned at the United Nations, I don't know how they calculate this, but in the history of wars, there's never been less casualties for civilians in a war than this war. So, and it's just unfortunate.
Let's talk about the media because you mentioned the media coverage regarding a different subject, but let's talk about how the media has affected your business and my business by the perpetuation of constantly talking about rates and fear and rates going up and how that creates different emotions for individuals who don't necessarily have the knowledge of local real estate industry trends.
Right. Well, that's a good point. In my opinion, you could look at the last 4, 5, 6, 7, last 20 years. The media never gets it right. And unfortunately, the herd will always follow the media. That's why they're out there. It's easier to sell based on fear. So they sell fear. And unfortunately, everyone follows. And now is interest rates are high, but now is the time to buy. I liken it, or I make the analogy to these stock analysts. I watch every day these analysts. When the market is bad, it's time to sell. No, that's the time to buy. They're telling everyone it's the time to sell, But no, that's the time to buy. When the market's high, everyone's happy. The analysts are like, buy, buy, buy. It's probably the time to sell. So I feel the media is just selling fear, and you have to look behind that noise or beyond the noise.
It's news. I feel that they use a lot of newsworthy quotes, and in order to draw attention to something,
hype. They want to build hype, and they want to
fear.
keep you focused on them so they can keep feeding you.
But I'll give you an example though. Someone like if you want to say a 7% interest rate is high, well, how is it high if I can get 5% return by putting my money in a savings account? Like, that's not high. That's a very small spread. Now, I understand to a first-time home buyer, they're getting the squeeze. Someone who's never purchased a home and doesn't have necessarily the savings to put the, to have the opportunity cost of, instead of paying cash, to put the money in. But someone tells me, hey, I'm not going to finance this property. Your interest rates are too high. I laugh when I hear that. I go, what are you comparing it to?
Yeah.
Because your opportunity cost is put it in a savings account at literally 5% interest rate. So how high is 7 when you're getting 5 in return? What's that net difference?
Well, first of all, in my opinion, a house is an investment in your lifestyle. So rate goes out the window. If you can make the payment, you could afford the payment, it's a comfortable payment, buy the house.
Buy it.
Buy it. That's my opinion. It's so obvious to me. And we look at history. And why do we look at history? Because history tends to repeat itself, so we know where we're going. When rates come down, the largest demand on housing is due to interest rates.
Of course.
So when interest rates drop,
2021.
what do you think is going to happen to demand? It's going to explode.
It's going to be nuts.
So where's the media saying, listen, folks, I mean, we don't know when rates are going to come down, but we do know they're going to come down. Mm-hmm. And when they come down, demand's going to go up and housing prices are going to go up. So buy a home. But everyone goes back to 2008, the great financial crisis. It's just...
I think the Fed is actually, they're trying to keep rates at these levels. Mm-hmm. The longer they keep them at these levels, the more that demand does slow down. Demand slows down. I mean, this is just my theory on what they're trying to do. The more that demand slows down, inventory will have to reduce prices. I think what they're trying to do is take the values from post-COVID and not let them have another major run-up, which will happen when they reduce rates.
They're in a quandary right now. There's a problem. Rates, it's great what the Fed's doing. But it's not really. Listen,
for us.
If you look, they're trying to thread the needle right now.
Right.
But rates have actually been coming down in the last week. I mean, rates are going to be based on the activity of mortgage-backed securities. And the Fed is just, that's going to be based on the same information that the Fed has. But the Fed, right now the Fed wants lower rates, but they're concerned about inflation. But what makes this whole situation so unique, not to bore everyone with economics, but the situation with COVID, with the supply demand, the supply chain issues that we had, that really caused a big issue in inflation. And right now, maybe keeping rates at this level is not the right thing to do because it's being shown that the economy is doing well based on these rates. So they don't have to go up, but they really need them to come down right now. So,
yeah, I mean, I think my personal opinion, the government put too much free money out into the system. Too many people had excesses and were able to spend. That drives inflation up. Supply chain issues, not having enough supply, that drives inflation up. Everything is driving inflation. So now we have a position where mortgage companies, and what you're seeing more and more, I was just at an event called The Gathering, a buddy of mine, Clayton Collins, hosts for Housing Wire, and it was really cool to hear, but here's what's happening. Mm-hmm. And every major CEO was there. Every real estate company, a ton of mortgage company CEOs were there. We got to listen to the Rocket CEO. He was actually a really smart dude. I was really impressed by him, actually. But side note, that being said, you're going to see a ton of mergers, and you're going to see a lot of companies start to consolidate. You're going to have real estate companies, because, especially with what's happening with the NAR findings.
Which we should talk about.
Happy to. What's going to happen there is you're going to start seeing more and more real estate brokers. They're going to make less money August 17th once this stuff gets implemented, assuming the settlement comes out the way it's supposed to. And when that happens, they're looking at partnering with companies like ours, with title companies, with insurance companies.
It's only normal.
And you're now creating these little pockets of partnerships.
Right. And, I think we're going to keep the onus on all these home builders because people are not leaving their homes. I mean, they're prisoners now in their homes at 2.5%, 3%. They don't want to sell. So we need builders to create more homes, more home building. But I feel what's going to happen, we just need rates to come down just a little bit. When rates start coming down,
just a little,
all right, we're going to have that individual at 3% that hates their home.
Or has to move for something.
Define that number, though. What's that little bit? What's the number part?
I feel once rates come down 1%. So right now, if a national average.
In the sixes.
If at the national average, it's all like, if the national average is 6.875, give that as an example. Once we get down to 6, you're going to see a lot of people starting to make that decision. Well, they're going to decide, am I going to choose my 3% interest rate or am I going to choose my lifestyle? All right. We were at 8%. We were at 7%. We're now at 6%. Now is the time for me to start living my life. I hate my home. I hate my neighborhood. I hate my neighbors.
Yeah, I think it's 5.
All right.
I think anything with a 5, I think what you're going to see is, and part of it is that we've had this high rates long enough that we have now scared. We've shown everyone what war is like. Yes. And now we don't want war, so let's go out and, but you get what I'm saying. I'm using war in a weird way. But
that's a great point because it's all psychological.
Yep.
I remember 2.5 years ago, when rates started ticking up, and I quoted a rate to my potential borrower. I'm like 3.5%. He's like, why so high? It's like I said 3.5%. It's like I just ran over his dog.
Yeah.
And I'm an animal lover. So that was a 3.5. And then now fast forward, when rates dipped a few months ago, we came down from 8% down to 7%. He was the same person dancing in the street.
Yeah.
So it's all psychological.
It's conditioning.
It's all conditioning.
It's definite conditioning.
Yes.
Before we get into more riveting mortgage speak, Cliff, a couple questions for you. You're 10 years old.
I'm 10.
You're 10. Pretend you're 10.
I'm doing that poorly.
What did you want to be when you grew up?
Always, from the moment I could remember, I had friends. I wanted to be astronauts, police officers, lieutenants, doctors. My dad brought me over a calculator once when I was 3 years old. I'm like,
stop.
I want to be a loan originator.
Stop. No, what did you really want to be?
When I was 10 years old, I wanted, besides the baseball player, the football player, I wanted to be an attorney. I really
wanted to fight with people all day.
I wanted to make those arguments. I wanted, maybe because they glorified it on TV, but I wanted to be in that position. I felt like that's what I want to do. Then I realized all the education it took when I got to school. So I'm like, you know what? Let me not be an attorney. I'll have a son, and he'll be an attorney.
He just passed the bar.
And he just passed the bar.
That's amazing. Congratulations.
Yes, I think a little influence on me. But no, that's what I wanted to do when I was younger. Okay. I wanted to go that route. Okay. So, yeah. It's just, life takes you in a different direction. I became more of I was fascinated with the stock market, things like that when I was a senior in college. Junior in college, 1987, we had the stock market crash. Mm-hmm. That was interesting. I started really reading into that. My first book I read in college, A Random Walk Down Wall Street. I really I felt connected to that. And
So when you finally started working in Wall Street and you were living in Manhattan, it was like you made it.
I made it. I made it. I made it. I lived on 87th Street, then 66th Street. I had a car uptown. I had one downtown. Things were great until you realize you really don't love. Watch out what you wish for, because you don't love what you do. It's
lifestyle
it's going to be a problem.
Got it.
Yeah.
What did you want to be when you were 10?
I think my answer is almost identical. I think I'm definitely a professional athlete. Got real close in my head.
Which sports?
I definitely didn't want to be bald. I'll tell you that much.
No, but I did. I wanted to be a lawyer.
Which sports did you excel at?
I wanted to be a lawyer as well. I thought I was going to go to Harvard Law. I liked the idea.
I knew I wasn't going to Harvard.
I did too, but I got a letter. I called my godfather, but it was really technically it's my grandfather's brother was a famous attorney in Montreal, and he went to Harvard, and he was buddies with Jerry Jones's attorney, the main
Dallas
attorney
Cowboys,
for Jerry
reference.
Jones. So he would send me the Dallas Cowboys Journal, and he wrote me a letter to go to Harvard Law. And meanwhile, like I hadn't, I'm like, I don't have the grades for Harvard.
Yeah, but, it's difficult.
I definitely I love the idea. I like arguing.
Oh.
Well, because we're in sales. Sales is psychology, and I like the psychological aspect of arguing, of formulating, of getting you to start saying what I want you to say, and then I can attack.
Master puppeteering.
Yeah, but
Exactly.
It's actually still a passion. I mean, my favorite show is Law and Order. I love Law and Order.
Law and Order.
Law and Order, yes. My New York accent.
Is he saying Lord of the Flies? What is he saying?
You were providing beverages here. But, I would stay in that office. I would not even go into private practice. I would stay in the district attorney's office,
Suits?
go after the bad guys. Yeah, I've watched all that.
Who's your favorite on that show?
I wasn't a big Michael Moriarty fan. I like what's his name? Waterston.
What show are we talking about?
Oh, Law and Order.
Suits.
Oh,
I'm talking about
Suits.
Suits,
Oh,
yeah.
okay, yeah.
We've moved on to Suits.
Yeah, we moved on to Suits. I wasn't a huge. I've watched it. I'm not.
Got it.
Yeah, never really binged, but I've seen a few episodes.
Any more touchy-feely stuff, Sarah, or can we get back
Not
to
in
business?
this moment, but I got to keep you guys on track.
Yes.
All right, let's go to the NAR stuff. We've kind of beat it to death, so let's not in terms of talking about it for the audience. So let's go straight into your impression of impact into our industry in South Florida.
Well, in terms of the NAR situation, I really feel it's going to be business as usual. And if I was a successful realtor, which we work with many success, I'd be chomping at the bit right now.
Yeah.
I would be embracing this new law because they're always going to figure it out. They're successful, and all this noise, all it does is really force the realtor to have a conversation with their client, and the successful realtor, that's what they do. That's why they're successful.
Yeah.
I mean, come on. I mean, basically, they could communicate to their buyer that for 3%, I'm going to negotiate a much better price. I'm going to prevent you from making any pitfalls. I'm going to negotiate this contract. I'm going to walk you through the whole process. I'm going to hold your hand, and you're going to have, you're going to buy your dream home. All for 2 to 3%? Come on. I mean, that's what they do. Mm-hmm. But the weaker realtor is not going to be able to have that conversation.
What percentage of realtors would you think are the weaker versus the ones who are going to survive and excel?
I don't think it's different than any other business. So
80-20.
Yeah, 80-20. I mean, that's what it is.
Okay.
I mean, that's like any other business.
So I'm in full agreement with you. I have a personal scenario where a client was introduced to me from an agent. And this right now, we're not in the buyer-broker agreement scenario for most companies. And so there's nothing there. We do like a TBD underwriting. We call it Choice Express. Mm-hmm. But anyway, so we had them all underwritten, and then they didn't find anything they liked. So they paused for a month and a half. They called me on a weekend, say, hey, we just stopped by this open house, and we're negotiating, and we're going to get under contract. but they left out their agent who brought them in.
Yeah.
And then this is where I'm 100% against dual agency. I think what agents making 3%, I have no problem with. Show your value, create your value, and then you are what you deserve. That's capitalism. But
listen,
the dual agency, I have a problem with.
You pay 20% you pay 20% to someone to bring you food.
Right.
You can't pay someone 3%.
Right.
That's a good way to put it. And it's the most important, largest choice
that you're ever going to make.
Life.
It's the largest investment you're going to make, and you need a professional. And just to, as one point, when I do transactions, when there's no agents, it's a very, very different transaction.
Yeah.
It's not as seamless. We need that successful, that creative agent on our side, on our team. It makes the whole process that much better.
Just a tremendous amount more time, and effort on our part if there's no agent.
Yeah.
But to the point of, again, what I was saying about the dual agency part is that all of a sudden this listing agent is now, and here's the part I was getting, like, you're not even doing your client right by saying, hey, I brought this client in, I'm not going to represent them. Here, save this 3%. Now, at the same token, like, you don't have my client's best interests at heart. Absolutely not. You can't, you don't see the prosecutor and the defender on the same side in the courtroom. So I feel like that, I don't know why the DOJ and why any of these lawsuits, the only argument that I could ever see about collusion or whatever words you want to use is not allowing dual agency. The rest of it, I think, is ridiculous.
Yeah. I mean, I think that really the term commission, I just feel gets a negative, it's just a negative vibe out in the street when you say, why? I don't use the word commission. This is my revenue. This is my fee.
I think that's the biggest difference.
That's the problem.
People assume commission with an extra pay on top.
Correct.
And that's not what's happening in this case. It's not a pay on top of another pay. It's their only source of revenue.
If you should welcome that revenue, that fee. Why doesn't an attorney call it a commission? They call it a fee. Or a doctor.
Or
that's
even a server or
a loan officer. Everyone's, what's your commission?
Your tip is then your commission, right? Because you're living off tips. So it's still part of it's how you make your money. It's how you make your living.
So that word commission, I think we should get rid of commission, and that's their income. That's their salary. That's how they make their living.
Yes.
And they deserve it.
Yeah.
I mean, you're an attorney. And you have all these weaker realtors. All right, I don't, not naming names, but
kind of smart of you,
probably. But the 80-20. But there are going to be some realtors now that lower their commitment.
Absolutely.
They're basically.
I'll do it for 1.5%.
I'll do 1%. 1.5%. So they're actually admitting, yeah, you know what, we didn't deserve. They're just not confident. Mm-hmm. Like the successful realtor, they know what they're worth. Mm-hmm. They're not going to lower it down. They know what they're doing.
I always say to people, you pay what you get for.
We have that on our side too, though. There's some people that will race to the bottom, that will work for ridiculous amounts.
Of course.
And that's just, it's not a sustainable business model.
If you got into legal issues and you're looking for an attorney, going back to the attorney, are you going to be more comfortable paying an attorney $700 an hour or $100 an hour? You're probably in better hands with the guy charging $700 an hour.
In theory, yes.
Right. All things being equal, if he's referred to you, he's recommended, got good reviews. I mean, he earns $700 an hour because he gets results. Mm-hmm. The guy with $100 an hour, he's not getting results. So it's kind of like getting an operation in a third world country. You'll pay less, but I don't know, what the outcome's going to be.
Might end up with 4 butts.
Right. So real estate's the same thing. I mean, it's the largest, like you said, Sarah.
It's the largest purchase of your life.
The largest purchase you're ever going to make in your life.
Yeah.
You need a professional. And God bless them. Let them make let them earn what they earn.
Yeah.
Let's wrap it up, Sarah. What's your last touchy-feely question you want to get from Mr. Bernstein?
Cliff, I know that you have one thing on the horizon for the rest of this year. So your personal, I know, and we can talk about your daughter's wedding really quickly, right?
Yes.
I know that's really exciting for you.
Very exciting. As a father, to have a daughter getting married in a couple of weeks, it's very, very emotional. And that's only because the caterer just...
You tell the catering bill came in today.
I got the catering bill, so I'm very emotional. the feeling, and the fact that she's found a partner that they're on the same page. Yeah. It's beautiful, and that's all. Cool. That's all we could ask for as a parent.
Absolutely.
Yeah.
So then my ask for you is for the next 6 months of the year. So we're finishing 2024. We have 6 months left, right? Like, what's one professional thing that you'd love to have happen?
One professional thing that I would love to happen. All right, I would like to be proven correct on interest rates. If you see me on social media, I'm one that feels rates are going to be coming down.
Okay.
I really do. And I feel we're going to end the year about a point lower. So I would like that to come to fruition. I believe we need rates to come down. I believe they are going to come down, albeit it's been a little slower process because of some things going on. But I want to be proven correct on interest rates because I know once rates come down, we've had a lot of challenges in this business, as you know, and I feel it's going to take care of a lot of issues we've had, and there's going to be a lot of happy people out there, and it's all going to be based on interest rates. So I want to see that come true. I want to see rates come down, and it's going to be business. I'm very, very bullish on the future, and I'm very bullish on the second half of this year.
I love it.
So I'd like to be proven correct on that.
Me too.
Yes.
Same.
Cliff, speaking of social media, if there is a consumer out there that would like to use your services for a loan, or any agents that want to get in contact with you, if you could share your contact information, how you would like to be.
The problem is I still use MySpace because I'm old. So I don't know if anyone's on.
Well, at least just give them their
Is anyone still on that platform?
Is your email
Give them your AOL email,
No,
and we
it's
can be good to go.
It's
got
Netscape.
it. Okay.
Netscape. So you could find me at Bernstein Cliff on Instagram. That's where I do, most of my educational stuff.
Okay.
So Bernstein Cliff on Instagram. That's my passion. I love to educate. So, follow me and give a like and.
Perfect.
Yeah.
Awesome.
Thanks so much for coming on.
Thank you for having me.
Bye, Cliff.
Bye.
Okay, that's enough whining for one day. We are so happy that you could join us today on Stop Whining About Real Estate. So please, not only listen, but subscribe, follow us, download, share, and if you're feeling it, give us a 5-star review. Hey, and if you'd like to be a guest on the show, please email stopwhining@choicemortgage.com. Thanks so much.